Moody's is serving as a reminder that even though it's been a quiet summer on the regional banking front, we may not be out of the woods.
Welcome to 5-Minute Finance. Today, we're diving into the fascinating world of banking. We'll explore the historical background of banks from ancient civilizations to modern times. Plus, we'll uncover the workings of banks under the gold standard and fractional reserve banking system. So let's get started. Number 1. A brief history of banking. The history of banking dates back to ancient civilizations with evidence of banking activities found in ancient Mesopotamia around 2000 BC. Merchants provided grain loans to farmers and traders in exchange for valuables. Temples and palaces in Babylon, Egypt, and Greece served as repositories for valuables and offered loan to settlers. One of the earliest legal codes, the Code of Hammurabi, provides insight into the sophisticated financial system and regulations during this period. The legacy continued in Rome, where Roman banks known as mensae provided currency exchange, deposit-taking, and lending services. Individuals known as argentari, banker, or money chargers played a significant role in the financial system, providing various financial services in ancient Roman cities. Number 2. The rise of modern banking. Fast forward to the Renaissance era, where the Medici family in Italy developed the double-entry bookkeeping system. The period saw the establishment of central banks such as the Bank of Amsterdam in 1609, the Swedish Riksbank in 1668, and the Bank of England in 1694. These central banks provided stability and regulations to the banking system of their respective countries. The Industrial Revolution in the 18th and 19th century brought rapid economic growth and increased demand for banking services. Joint stock banks emerged, allowing people to pool resources and invest in new ventures. Central banks began issuing banknotes and managing the money supply. Number 3. The gold standard and its downfall. The late 19th and early 20th centuries saw the dominance of the gold standard as the global monetary system. Countries pegged their currencies into gold, facilitating international trade and investment. However, the gold standard had inherent flaws, including inflexibility during economic crisis and the limitations on countries' ability to manage economic fluctuations. The gold standard faced challenges during the Great Depression and eventually collapsed, leading to the adoption of fractional reserve banking. Under fractional reserve banking, banks are required to hold only a fraction of their customers' deposit in reserve, allowing them to lend out the rest to stimulate economic growth. Number 4. Types of banks and services. There are various types of banks, each offering different services to meet the needs of their customers. Retail banks, also known as consumer banks, cater to individual customers and small businesses. They offer services such as checking and savings accounts, credit cards, and payment processing. Commercial banks primarily serve businesses and provide business loans, trade finance, and treasury management services. Investment banks specialize in capital market activities, underwriting securities, and asset management for institutional clients. Number 5. Central bank and their roles. Central banks are responsible for overseeing a nation's money supply and monetary policy. They control interest rates and aim to achieve macroeconomic objectives such as stable inflation, economic growth, and low unemployment. Central banks also act as lenders of last resort to commercial banks during financial crisis. Number 6. Future of banking. The future of banking is exciting and challenging. With the advent of the internet, online banking, and digital currencies like Bitcoin have emerged, reshaping the financial landscape. Additionally, global financial crises have prompted renewed regulatory efforts to enhance stability and consumer protection. Some predict that the rise of fintech and blockchain technology will disrupt traditional banking practices, offering innovative solutions and greater financial inclusivity. However, the future remains uncertain, as new challenges and opportunities will continue to shape the banking industry. And there you have it, a brief history of banking and an overview of how banks work. We hope this insight has shed light on the complex world of finance, literally. As always, if you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more informative content on finance and economics, and learn and let us learn. Feel free to share your thoughts and predictions about the future of banking in the comments below.